At this point now, we're very, very touchy because there's a couple of things at play that have been factors, but yet somewhat ignored. Like, for example, the fact that we still have not only an inflation narrative with more stockpiling and more supply chain disruptions, like, for example, now there was also a cyber attack on a big meat plant. So all of this stuff with wheat and soybeans and corn that started off the day very strong is one thing, but now you have oil back in the picture with a big gap up on Tuesday to start the week. You have an OPEC meeting coming up. And at this point now, with oil about $68 a barrel, which is a new high since 2018, if oil continues to surge, I think that the narrative will come back not only from inflation, but there'll be a separation from, oh, it's good that oil's rallying because the economy is coming back, to, oh, oil's rallying, how much more inflation can we handle before the Fed has to do something about it? So that's where I'm looking at right now, is what happens with that, and also what happens with the junk bonds. We've talked about junk bonds before, because junk bonds are where we saw a lot of the bond buying by the federal governments, particularly the banks, and also a lot of speculators, and they gapped down today. So these things need to be watched very carefully. If things sort out, yeah, we can see a big summer rally. Otherwise, I think that we would have to be cautious and maybe even looking at a double top in the S&P 500. But I'd be aside now and a little patient. Last time they came out with any comments, which was about a week ago, there's a very big divide among the people in the Fed. Some people think that the economy is going to run hot and that they can afford to back down, or what they're calling, the taper tantrum thing. And others think that the economy is still super fragile, particularly if you look at some of the global economies, that especially countries that are still dealing with COVID in a big way, and that they continue to be accommodative. But essentially, I think even the biggest story when it comes to the Fed is that Powell's term ends at the end of February. Yes, next year, end of February next year. I had to think about that for a second. And so that means that he's also going to be a little bit under the gun. So I'm not sure. If I were in the Federal Reserve right now, I would probably be really concerned about the inflation numbers. Some of the metrics that they use are now starting to turn, like oil. And if that's the case, I would think that their first responsibility is to make sure that inflation doesn't get out of control. The economy being fragile is a dilemma for them, but they have other tools. I mean, they could actually do things like a quantitative easing on one level, but on the other level, they can also stop doing so much bond buying. So we'll see what happens. Well, I think you're certainly going to see a temporary lift to the travel and leisure industry. As we know, we're seeing already AMC as part of the short squeeze benefiting, but also from a fundamental standpoint, you can actually go back to the movies. At least you can here in Santa Fe. As far as travel itself, I can tell you, yes, I just planned a trip. And trying to plan that trip and looking at airlines, they have just jacked up those prices tremendously. I'm paying almost double an airfare that I paid before the pandemic. So at what point do people say, I got to get away, I got to get away, I got to get away? But wait a minute, it's so expensive to get away. Maybe I need to wait. And I think that's where we're going to look at oil again, because obviously airlines will have to be somewhat cognizant of what happens with oil prices, and they'll have to continue to raise their fares. Planes are getting packed, so they can also afford to be a little bit more willing to raise their fares for that. And also, in terms of the hotels and things like that, I think that we could see some nice activity this summer. But even again, it's one thing to think the hotels are packed, but I looked around at a lot of different hotels throughout the whole Southwest, and there's a lot of availability. So the COVID is a factor still. I mean, traveling is a pain in the neck, especially if you want to get out of the country. And yet in the country, there are still many people who are hitting the road with their RVs, but those gas prices need to be watched. Well, first of all, in terms of just looking at the technicals of Bitcoin, let's just isolate Bitcoin right now because it still has the majority of the market cap in the crypto space with close to 43%. So if we look at crypto right now, what's happening technically is that we're making lower highs and higher lows, which means you're actually almost forming what they call a wedge. And when you get into a wedge situation, the volatility starts to decline until you either break out or break down underneath that wedge. So right now, this price between 33 and 40,000 is an important level that we have to see hold. So just looking at it without overthinking the fundamentals, if it gets over 40,000 or 40,500, I think you have to follow it. And if it breaks down under 33,000, I think you could see 20,000, and that would probably be an incredible buy opportunity. As far as the fundamentals, you have more and more banks and governments talking about digital currency, with United Arab Emirates joining it now, besides China and South Korea, now the US. So these government-backed digital currency could be a factor for Bitcoin as well. And then you have these big people like Carl Icahn saying he wants to start investing in Bitcoin, and then Ray Dalio coming out and saying he'd rather be in Bitcoin than in bonds, in US bonds. So I don't think that the future is in any threat. In fact, regulations could actually wind up being a good thing, because it means that governments are trying to pay attention, and any kind of regulation could bring in a lot of investors that have been on the sidelines. But yeah, right now, just watch the technicals. I think they're going to give you the best near-term picture.